Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing 4 articles. In the article we are on right now, we will be discussing their latest news updates, and then after that, we'll be going over their latest price predictions among professionals, experts, analysts, and what investors think that this company could be worth over the next few months. After that, we'll be moving on to more of an analytical topic to where we are going to project when this company will become profitable and how this could positively impact their overall share price. And then lastly, we will see how Palantir Technologies compares to their overall competition and whether or not this company is a buy rating, a hold rating, or a sell rating over the next year. So for more videos on Palantir Technologies, which would include news updates, price targets, what analysts are saying, and the overall technical analysis of the company, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Quickly, let's catch you up because Palantir Technologies is going to be releasing their earnings report for the full year and quarter 4 of 2022, and that will be released on February 13th. Many investors are quite anxious about this earnings report because this could dictate where the future share price is headed, at least in the short term. I also want to make you aware that recently, their overall revenue guidance and earnings per share have been adjusted, and it doesn't look too good for this company in the short term. And of course, we will be analyzing these estimates to see what I think of these. Also, if you weren't familiar already, the CEO, who is Alex Karp, held a private event for Palantir Technologies partners and overall customers. On top of that, Palantir also signed a $50 million deal with Sompo Holdings, which is an insurance company over in Japan. And this means in the short term, due to the private event as well as the company landing a contract that's worth $50 million, this caused originally the share price to surge. However, after this initial surge, many professionals believe the company could actually fall after their earnings report, and here's why. Currently, Wall Street professionals and analysts estimate that the company is going to show growth slowdown for quarter 4 of 2022 to where they're going to bring in a growth rate of only 16.7, which is directly in line with management's midpoint guidance of 16.6%. The reason this is somewhat negative and bearish is because overall, the company was supposed to be bringing in anywhere between a 20 to 30% CAGR over the next 4 to 5 years. And as of right now, they are not meeting that particular projection and estimate from their management. So this tells investors that management is not necessarily keeping their promises, but because management has reiterated that their growth will slow, investors should not be anticipating a large earnings or revenue beat in the upcoming earnings report on February 13th. However, this does mean that if they do bring in revenues or earnings that's over their current projections, this could cause the overall share price to increase. But as of right now, there's more of a bearish negative tone for their upcoming earnings report. I also want to make you aware that investors should not expect this company to appreciate more in price until after the first quarter of 2023, because according to their current forecasts, the company has received less than impressive overall contracts over the past few months. And of course, this is going to negatively impact their future revenues. But that is all in the short term. What if we move to a medium to long-term lens when viewing this company? By looking through a longer-term investment horizon, we can actually see that global companies right now worldwide are trying to reshore and restore their overall technological and manufacturing capabilities in-house. What does this mean? Essentially, instead of companies hiring China and offshoring their manufacturing to other companies or countries that can do it cheaper, these companies want to be efficient enough to do everything in-house. To where globally, worldwide, we are experiencing somewhat of a new deglobalization era. And this is because many countries are moving away from relying on China for their overall manufacturing, as well as that company's overall supply chain. And this is going to take many decades, but this means that companies that want to do this and become self-actualized, that they will need technology that Palantir can provide, because Palantir is one of the best companies in regards to getting an organization's supply chain on point, and also they're one of the best AI AI, which is artificial intelligent developers. So using AI and their supply chain technology, this will allow companies to no longer be reliant on China to manufacture their products at a cheap price, and instead they can use Palantir Technologies to become self-sustaining. So this is going to reflect very positively on Palantir Technologies. And on top of that, now the big news in my opinion is that Microsoft Azure's recent integration with Palantir highlights the opportunity for Palantir to expand their Foundry's adoption worldwide. So overall, this is phenomenal, and this should lead to long-term or mid-term stock price appreciation for Palantir Technologies, considering that Palantir has one of the most technologically advanced artificial intelligence-driven operating systems, because they've been working on this operating system for the past 20 years hand in hand with the United States government. So looking forward to the medium or long term, this company could pay off for sure, but in the short term we could see the share price fall from the current share price, which we will get into in the next article when we talk about their price predictions. However, right now I really want to talk about the rivalry between the United States and its allies, between China, the United States, and the US's allies. As a result of this rivalry, Palantir's main mission is to empower the West, which would be the United States and our allies, against various adversaries. And I think Bloomberg reporting on what Palantir has said about this, between the rivalry between the West and the East, is something that investors need to be aware of. And I quote, "Our products," and this is Palantir talking, "are actually also weapons of war, and we are not going to sell them directly or indirectly to adversaries. This made us enormously controversial in Silicon Valley, but quite frankly, it's one of the decisions I'm most proud of. We are a company whose most important purpose is to empower the West to even higher heights in the commercial and government context," end quote. And I 100% support Palantir, and it's also one of the reasons why I have invested into this technology, because I want to support the United States. The author also believes that for the medium-term recovery for the PLTR share price, that we could see great strength in overall commercial and government segments within the company, especially as more commercial clients rely more heavily on artificial intelligence. So where does this put Palantir in the short term? Well, let's look at some current stock prices. Well, now let's look over at some stock price targets. On this slide, I want to make you aware of the high-end price predictions and the low-end price predictions, and how this has evolved over time, starting all the way back in April of 2023 to where forward projections are pointed for January of 2024. Right now we have low-end price predictions that range anywhere between $10 and $4.50, with the most recent bearish analyst saying this company is worth just $4.50, while the most positive bullish analyst recently says the company could be worth around $15. This would either equate to a 37% downside potential or a 42.3% upside potential from the share's current price. As of right now, the current share price trades for around $8.43, and professionals on average believe this company should be worth around $9.13 by January of 2024. Again, like we said earlier, in the short term, this company is going to have a lot of problems, specifically in their share price. And this is not only going to be due to their upcoming earnings report, but also when this company is set to achieve profitability. For instance, let's talk about their current projections for profitability. As you know, when a company achieves profitability, this is a very important milestone. However, due to the company's recent announcement of a loss of $520 million for the full financial year, or at least those are estimates, this has then moved the company further away from achieving a profitability, which investors are not excited about. So this then begs the question, when will Palantir Technologies break even? Well, that's an excellent question. According to the current professionals who are covering this company, the consensus is that the break-even point is near, according to them. They expect the company to post a final loss in 2024, right before turning a profit throughout the year of 2025 of around $85 million. So right now, current projections say that in 2 years the company could become profitable. However, what is the problem with this? Well, if we work backwards, this would mean that the company would have to grow at around a 69% compounding annual growth rate year over year on average to achieve a profitability. Otherwise, the company will become profitable even later than originally anticipated. To put this into perspective, the company recently grew, or is projected to grow in the recent quarter, by around 16.6%. However, according to these projections, the company would have to grow by around 69% from now over the next 2 years for them to achieve profitability by 2025 or during 2025. And right now, that just doesn't look very feasible. So as of right now, I would say maybe by the end of 2025 or the beginning of 2026 would be the best bet, unless Palantir has some secret plan to cause them to skyrocket in overall profitability, which is exactly what could happen if multiple government agencies as well as commercial clients adopt their AI technology. Now, although that is pretty negative news, I do want to mention and give investors the benefit of the doubt because Palantir Technologies currently has no debt on their balance sheet, which is absolutely amazing. It is extremely rare for a loss-making growth company such as Palantir Technologies to not have a high level of debt. This means that they are very strong, they can weather the storm of a recession, and overall the company will be around for the next decade. So far, the company has been operating purely off of its equity investment and does not have a debt burden, which puts them leagues ahead of a lot of their competition. But now let's actually compare them to their competition to see how other growth and technology companies stack up against Palantir Technologies. So according to their peers, their price to sales ratio is competitive. However, the price to sales ratio versus the industry and the price to sales ratio versus the fair ratio is rather negative. Now, on top of that, apparently, according to some analysts and fair value estimates, the company's trading below their fair value, because many experts believe the company could be trading between $9 to $10 right now. But this also has to be weighed against the analyst forecasts that we looked at earlier, which is quite bearish. But again, it just depends on who you listen to. For their price to sales ratio, which is an accounting ratio that shows the company's annual revenue compared to their overall market cap, the company's trading at around 9.4 times, which is rather high. Now, depending on how quickly a company is growing, you can take on a prior price to sales ratio while adequately still managing your overall risk. Right now, they are set to bring in $1.83 billion and the market cap is $1.29 billion. However, their price to sales ratio does compare pretty favorably to some of the other companies, such as Paycom Software, Unity Software, and HubSpot. Paycom Software is trading way above their peer average, which is 10.6, and because Palantir is only trading at 9.4, this puts Palantir on the better end of their overall peers. And if you're not familiar with these accounting ratios, ideally we would want these ratios to be as low as possible because that makes them a better buying opportunity. So when we compare Palantir to their direct competition, we can see that Palantir does stack up very nicely and they can be considered undervalued. However, with that being said, they are not anticipated to achieve profitability for quite a while, considering that it's been offset and more time is needed before they become profitable, which is a Debbie Downer for investors. And the last bit of bad news is that their upcoming earnings report could be quite negative, but the long-term fundamentals of this company is still intact. Remember to go and practice proper risk management by not overexposing yourself to this company. I myself do not have more than a 5% initial allocation into this company because there are so many other fantastic companies to buy on the stock market right now. But if you want more news updates on Palantir Technologies from an unbiased source, remember to go and smash that like button right now. Subscribe if you are new, comment your thoughts down below, subscribe if you are new, smash that like button, and I will see you in the next YT video.